Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be jumping into the fundamental factors weighing on the digital asset landscape. So make sure that you stick around for the entirety of this video breakdown so that you actually take something valuable away from why your digital assets are not performing the way that all these bullish moon boys have been promising you that they're going to perform over the past consecutive couple of months. Again, this is not a bearish video breakdown. I am bullish long-term on the digital asset landscape, but I am extremely realistic, and I understand as a day trader in these markets why the prices of these digital assets have seen some massive outflows over the consecutive past couple of weeks. So let's jump in. I'm just going to share screen with you guys real fast, and then we're actually going to roll over into a clip from the live call that we did this morning with Mr. Aqua and Mr. Man, breaking all this information down for you guys by showing you all some screenshots and some fundamentals. I said to you guys, XRP and crypto holders, please stop following influencers that are telling you all, let's zoom into this so you can see it a little bit better. Please stop following crypto influencers that are telling you all that crypto is bearish because of who a co-founder votes for. Down below are some screenshots of two wrong articles manipulating the masses from a retail news outlet and ignorant XRP influencers, which again exist to an extensive level in this crypto ecosystem. And there are also two screenshots of the correct fundamentals weighing on risk assets across the board. So tap into real research. Here is why crypto lost over $48 billion today and is well below $1.9 trillion this week. And I just want to show you guys these screenshots real fast. Again, I'm not trying to attack these influencers. I don't know them personally, but this type of information needs to stop. So I, for the sake of not talking crap about these influencers, blocked out their name and their profile picture. But to each his own. Make sure you guys are following people that are actually putting out value. This individual on X said, if you need another reason to be bearish on XRP, here it is. And they posted, the co-founder and executive chairman at Ripple endorses Kamala Harris for president. This is not why the digital asset XRP is bearish. We can also see fundamental factors from FX Street saying XRP declines to around 53 cents as Ripple co-founder extends his support for Kamala Harris. Large financial institutions do not care about who these co-founders are, supporting politically. These are correct fundamentals from today. Chicago Fed President Goolsbee voices concerns about risks of recessionary fears rising. Now, we also have further possibility of the yen carry trade unwinding further, also weighing on risk sentiment. Hopefully you guys enjoy this and you learn something valuable and you're not misdirected from these mainstream influencers and these fundamental articles from a retail perspective manipulating your brains. Tap in and start to educate yourselves on the markets in which you are operating in. With that being said, let's head over to the video call from today, and I will see you guys in the next CYPRX breakdown. So yeah, we got almost 300 people tapping into the call today, so really do appreciate each and every single one of you guys for tapping in. We got Mr. Man and Mr. Aqua on the call today. Mr. Man came back from his little vacation, so it's good to have you back, bro. I'm going to start off the call today by just really cooking and rapping about the markets in the current environment. As an investor and as a trader in this space that is actively profitable, I'm really sick and tired of seeing all the miscommunication, misunderstanding, and just misinformation amongst retail investors in this space that are just distracting people and leading them astray and misguiding them. And I don't want any of my followers or any of these two gentlemen's followers on the Twitter and YouTube space to be the type of people that are distracted by the idiots in the crypto community that have no idea why prices fluctuate. For example, I know off the top of my head, without even looking at the markets right now, that the crypto market cap is below $1.9 trillion. It probably lost over $45 billion worth of value today alone. And that is not for some random reason. And it is sure as hell not because of the fundamentals that I'm going to share with you all to start off this call. So my purpose here throughout the entirety of my spiel real fast is to enlighten those of you all who are seriously looking to get educated about the market movements, why we're seeing sell pressure in crypto right now, and why all of the bullish moonboy targets that you've been led to believe are going to come into fruition last month, the month before that, and all the months before that have not happened yet. And so if that sounds like something that you want to learn deep deeper perspective on, stick around for the entirety of my segment of this breakdown, because I really want to get that point across to people, so you can not only see that this is easy information to come across, but that the vast amount of individuals are not paying attention to this. And it is the number one reason, and why, my personal opinion, most crypto influencers and crypto investors lose in this space, is because they have no freaking idea what they're getting themselves into. I don't understand why people or investors in general would get involved into a market, whether it's stocks, crypto, commodities, bonds, whatever your, floats your interest, to make money, and not actively try to learn and educate yourself on it. And that's the number one problem with crypto, is you have all these influencers in an internet age that can come in and read documents to you and read fundamentals to you and sound educated by making bullish price predictions, sparking your dopamine, right? But they aren't actually educated on the subject matter at hand. They don't actually know what drives volume and volatility to this market, and they make up. And you all read that garbage that they present on the internet because they have hundreds of thousands of followers. You think that they are important, or you think that their opinion or whatever they're discussing or talking about actually matters, when in reality it doesn't, right? So I'm going to attempt to kind of shed some light as to why the crypto market is down. I'm done my spiel, but I'm always in an attempt to educate and spread valuable information. And individuals that are embedded into my community know that. And individuals that follow me on the outside that pay attention to the things and the information that I post also know that. So let's jump in. Mr. Man and Mr. Aqua, I do apologize because it's going to take just a quick second. But then after that, I know Mr. Aqua has some video clips he wants to share. And then we'll let Mr. Man share any good valuable information he wants to communicate with you guys today. So I want to start off with this, because this and these types of posts on the internet literally make me laugh out loud. Not only because I see the amount of impressions and views that these types of posts get, because the vast amount of people, like I mentioned, are distracted, but the fact that people actually think that these types of fundamentals move market prices. It is literally comical when I see stuff like this. And if you think that these are the types of fundamentals that move prices, you are delusional and you've been following the wrong people, and you need to stop, because you're going to constantly get wrecked. You're going to get led in the wrong direction. You're not going to know when's a good time to dollar cost average in, when's a good time to sell your positions, so on and so forth. And you're going to be following people that have hundreds of thousands of followers that never put out valuable information, and you don't want to be that type of person. So this from Watcher Guru: Justin, Ripple co-founder and executive chairman Chris Larson endorses Kamala Harris for president. This has 1 million views. Okay. And if we head over here to a retail fundamental website called FX Street, you can see that they will go out, whoever this person is, Ekta Mora, I don't know who this author is, but they'll write fundamental pieces like this: XRP dips to a 1-month low to 53 cents as Ripple co-founder backs Kamala Harris for US presidential elections. And people will read these headlines and really think, intrinsically believe, that that is why XRP is not performing well. You are an absolute delusional person if you think that this has anything to do with why XRP or the rest of the cryptocurrency market is selling off right now. Do you really think family offices, private wealth managers, asset managers, hedge funds, institutions give a about Chris Larson's political perspective? Absolutely not. Absolutely not. They do not care. Okay. And so let's just go back in time, and I want to show you all and really educate you all on why we're seeing sell pressure on riskier assets like crypto, and show you all that not only in the CYPRX community were we talking about this, but we predict this months in advance, not driving any fear, uncertainty, or doubt in the market, just real logical technical analysis based off of fundamental factors that either drive inflow or outflow of risk assets like crypto. So if we go back a month ago, just showing you guys, I'm going to mute Mr. Man real quick because I think he's got some background noise. This is from August 5th, just to show you guys I'm not making this up. What weighed on crypto heavily about a month ago at the end of July rolling into August? There was 2 primary factors. We had recessionary fears escalate amongst market participants, and we had the yen carry trade. And fast forward to today, I'm going to show you all how those two primary factors are still weighing heavily on risk sentiment, where investors that have much more money than you and I that actually control the price fluctuations of this market are refraining from taking aggressive bullish bets because those two factors are still being focused on in the current market sentiment. So just to show you guys I'm not making this up, this is from a month ago, August 5th, 2024. Crypto plunges amid recessionary fears and market sell-off. Bitcoin and Ether plummeted to multi-month lows as concerns over potential US recessions and weak economic data rattled financial markets. Then we also had the yen carry trade. This is also from August 5th. However, the yen carry trade really unfolded on the 31st of July, and I'll show you guys that in just 1 second. But we see investors are unwinding the biggest carry trade the world has ever freaking seen. Highlight, right? That is massively important. Why would you not want to pay attention to this? This is something that has not happened since 2007, over a decade, right, of time. And I'm going to show you guys why this is so important. We're going to break this down. Rapid unloading of carry trades extended on Monday. Remember, this is back from the beginning of August, with market participants seeking to roll back on popular trading strategies amid dramatic global sell-offs in risk assets, keeping in mind that cryptocurrency is seen from a financial institutional perspective as the most risky asset class on the face of this planet right now. So crypto falls in line with that category of risk assets. Then we also have this one from August 9th. Carry trade impact on world markets. On Monday, global equities and digital assets underwent a dramatic sell-off as the unwinding of the Japanese yen carry trade rattled markets. So keep in mind, as we rolled over into August, on the 31st of July, the Bank of Japan hiked rates, right? Where we can see here, this is from the 31st of July, 2024. Japan hikes interest rates for the second time since 2007. That is massive. And it rattled crypto and stock markets across the globe. We saw sell-offs at an unprecedented scale. Crypto went from $2.4 trillion all the way down in August to $1.7 trillion. And we're still seeing today those same factors that weighed on risk assets at the beginning of August unfolding in the markets today. Here you can see this is an updated fundamental piece from September 6, 2024. The Fed official Gooseby says that the odds of a recession might be rising. So we're still seeing those recessionary fears linger in the markets, which again keeps larger investors than you and I hesitant from taking aggressive bullish bets. Then at the same time, here's another fundamental report from mid-August, August 19th, 2024. Attention, Bitcoin traders, the Japanese yen is strengthening again. Keeping in mind that the strengthening of the Japanese yen at the end of August, or sorry, excuse me, at the end of July, beginning of August, weighed heavily on crypto. Okay. Here is a fundamental video breakdown from 3 months ago from within inside the private CYPRX community, where we told individuals that this was going to happen, that we were not going to supersede the March highs at $2.7 trillion and that we were going to start to pull back down into the yearly lows at a roughly around $1.8 to $1.7 trillion in crypto, just to show you guys that we're putting our money where our mouth is at. We're not calling out fear, uncertainty, and doubt, trying to get you guys to sell your positions or anything like that. We're trying to actively teach you all what is happening in the market. So let me show you guys what I'm talking about. Like I mentioned, most crypto investors will go and they'll read these dumbass news articles like this, and they'll be like, oh my gosh, Chris Larson supporting Kamala Harris? That's why my XRP isn't performing well? And you're dead wrong. Don't think like that. That is the dumbest excuse as to why crypto is doing what it's doing today. Let me show you what I'm talking about, okay? Here's the XRP price charts. And like I mentioned, looking at this fundamental piece, the Japanese central bank, Bank of Japan, hiked interest rates on the 31st of July, 2024. If we head over to the XRP price charts and we look at the candlestick on the date of July 31st, 2024, here you can see XRP topped out at 60, almost 66 cents. Here's the fundamental, right? We can see the negative implication that that had on the digital asset XRP. XRP, just like the rest of the total cryptocurrency market cap on the same exact day, dropped from 65 cents all the way down to roughly about 43 cents. If we go look at the total cryptocurrency market cap on the same exact day, July 31st, look down at the bottom of my charts, you can see the total cryptocurrency market cap went from $2.4 trillion all the way down to 1.7. If we go look at the yen, Following the yen basket, this is the strength of the Japanese yen. And we go look at the same exact date of the fundamental, July 31st, 2024, and we go look at the date at the bottom of the charts when the central bank of Japan hiked interest rates for the second freaking time since 2007. What happened? The strength of the Japanese yen increased significantly, and the yen carry trade unwind started to rapidly unfold, where investors started to rapidly sell riskier assets like stocks and crypto and started to buy the Japanese yen. The same thing in most recent times has just started to unfold, where you can see here, yet again, the Japanese yen is significantly increasing in strength, and investors are hesitating to take aggressive bullish bets in risk assets like crypto and stocks. I don't even trade the stock market, but I can guarantee that the S&P 500 or some odd whatever equities is down today. Guarantee it. Because we're seeing a higher inflow into safer haven assets like the Swiss franc, like the dollar today increased in strength, like the Japanese yen. So investor appetite is still lingering in fiat currency, i.e., safer haven assets, because of these lingering recessionary fears, because of the interest rate hikes that are on the forefront or on the table still from the Bank of Japan, right? And so you need to understand that these are the factors that are weighing on risk assets, not political perspectives of these co-founders and CEOs of these major blockchain companies. No, like hedge funds, I guarantee you if you go to a hedge fund or an asset manager or a family office and you present them this fundamental and you say, hey, are you guys selling your digital assets because of this? They would literally laugh at you and tell you to leave their organization as fast as possible. Okay. Guarantee you. They look at you like you have freaking a third eye on your forehead. Right. So I want to break this down for you guys. And we give these types of fundamental reports and updates to our private community members so that way they know what is actively going on. For example, here's a copy of our private report today where we broke this down intrinsically for our private members, explaining why crypto is at $1.8 trillion, why we lost $48 billion today, right? Keeping them in the loop with what's actually happening in the market and not this bullcrap. So if we go look at some updated fundamentals, we can see this is from Bloomberg. This is from September 3rd, so just a couple days ago. Ueda reiterates, that's a Japanese central bank representative, that the Bank of Japan will lift rates if the outlook is realized. This is a hawkish comment from central bank representatives of the Bank of Japan, right? So again, what's this do? This drives more strength for the Japanese yen and further supports the possibility of the yen carry trade unwinding even further. If we go over here, FX Street, look at this. This is from the 6th of September today, 2024. Further unwinding of the carry trade. The unwinding of the carry trade in the FX markets continues, with major safe havens returning to the extreme scene against the dollar in early August. Keep in mind, I just showed you guys fundamental reports, how the same fundamental, the yen carry trade unwinding, negatively affected risk assets at the beginning of the month. The same fundamental factors are still weighing on risk assets across the board. Yet because of these manipulative articles, people will think that because of freaking Chris Larson's political perspective, your XRP is not performing well. So what does this do? This allows for these manipulated influencers that have no idea how markets move, that have a large following, to get online and say, oh, XRP CEOs or Ripple CEOs and co-founders are dumping on you retail traders. Tell me I'm wrong. Tell me that you are not seeing those types of tweets right now. Oh, they're just Ripple's just bagging on y'all. Retail traders, they're just selling and dumping on you guys. No, that is not what's happening, people. Larger investors with much more money than you and I that actually move these markets are hesitant from taking aggressive bullish bets because the risk sentiment right now in the digital asset landscape and in equities markets is risk off due to some of the factors, not all, but some of the factors that I'm showing you today. Primarily recessionary fears and an increased appetite for safe haven assets like the Japanese yen. Where if you go look at the strength of the Japanese yen today against other major currencies, this week alone, the Japanese yen increased in value over 8% from Monday's low to where we currently sit today. That is a significant increase in strength in this currency. Okay. And what I'm trying to get you to see is that the vast amount of individuals that are in the retail space, they're not reading these fundamentals. They're not going through what it actually takes to become profitable in this market, to know what creates inflow and outflow of risk assets. Because again, they only got into this space to make money. They did not get into this space to understand the markets in which they are involved in. And that is why, to full circle, most people don't make money in retail, because they get in hoping to make money, thinking that it's easy, but it's not. You have to study the markets in which you are operating in. So here is a fundamental piece just to show you guys that there are retail articles that talk to you guys about this stuff. This is from September 3rd, 2024. Bitcoin falls alongside stocks following the Bank of Japan's rate hike comments, like I just mentioned. According to Bloomberg, the market also fell on Tuesday. This is from September 3rd, as the Bank of Japan hinted at more interest rate hikes. In a document submitted to a government panel chaired by outgoing Prime Minister Kushida, bank governor, because I'm going to butcher these names, Governor Ueda explained the central bank's policy decision in July, reiterating that the regulator will continue to raise interest rates if the economy and prices performs as expected. This reminded market participants, look at this highlight right here, when the Bank of Japan raised the benchmark borrowing rate in July, triggering an unwinding of the yen carry trade and destabilizing risk assets, including Bitcoin. And what did I just show you guys? That those same exact fundamentals, as of time of recording this video on the 6th, are still weighing on risk sentiment. The markets do not give a F about political perspectives from these co-founders and CEOs. Stop thinking that these CEOs and co-founders are dumping on you because these ignorant retail articles that are written by these uneducated people are telling you so. And instead, attempt to do your research on what actually moves the value of these digital assets. So with that being said, my last spiel that I'll go over is explaining to you guys in detail via a fundamental report why the risk carry trade, or the yen carry trade, weighs on risk assets. Okay. So let's break this down. This is a fundamental report that we typed out on the 5th of August. So over a month ago. Keep in mind, I'm just trying to show you guys that we're actively keeping our community engaged. Remember when all these fundamentals were coming out, telling you all that risk assets were bearish, and the vast amount of influencers on the internet, I know you all saw this, were like, what the heck is going on? Why is crypto crashing? Fuck crypto. Everybody sell. Get out. What's going on? They had no idea why the markets were selling. Here at CYPRX, we were at the forefront and we called for this months in advance. Keep in mind, this is from May 23rd, 2024, when we called this pullback. We didn't call for a crash. We called for a correction, and it's now unfolding, and we know why, right? So we're not in panic mode. Nobody in CYPRX is in panic mode. No, we were not buying months ago when the market was rallying. Now that the market's discounted, we are taking advantage of discounted opportunities, right? So let's just go through this. Let's go through this quick overview. This will take another 5 minutes, and then I'll pass the torch over to these two gentlemen here. So yen carry trade and the yen strength. Keep in mind, remember, this is back from the 5th of August. And if we go up here, we mentioned some fundamental factors weighing on risk assets. We said number one, the yen carry trade and the yen strength. Number two was global recessionary fears. And number three, back at the beginning of August, was Middle East tensions and escalations, which as of time of recording this, have slightly dwindled and withered away. They're still on the forefront and still need to be paid attention to, but they're not as heavy weighing on the markets as they were back at the beginning of August. So our primary focus is going to be the yen carry trade, global recessionary fears, and right now I'm just going to break down the yen carry trade and why this negatively affects risk assets. So pay attention, okay? Because you can say the yen carry trade affects risk assets, but then if you don't understand why it does and why there's more demand for the yen and not risk assets, then you don't understand it. And you're just saying something. For example, like in DeFi, people say, oh, I don't want to get involved in DeFi because I don't want to experience impermanent loss, when they don't even understand the terminology impermanent loss without going into detail. Okay, so don't be that type of person. Understand the vocabulary that you're transmitting out into the universe. So the Bank of Japan's monetary policy update, keep in mind, was on the 31st of July. And what you have to understand is that these large financial institutions, what are they in search of all the time? Yield. Yield, 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 all caps yield. They want to know where they can house their liquidity, their capital, their cash, and earn yield on it. Now, In a low interest rate environment, that tends to be in riskier assets that appreciate against fiat currencies that aren't performing well, like crypto and stocks that tend to appreciate in value in a lower interest rate environment. In a higher interest rate environment, they tend to house their capital in fiat currencies and whatever central bank domestic currency that's earning higher interest rates, because their goal as traditional investors is to earn consistent yield. Okay. And so think about it. If the Bank of Japan, for the first time in years, is starting to hike rates, what are they going to do? They're going to get a higher rate of return, having their cash, their capital, their liquidity in yen. Okay. Just to keep it simple. So, Bank of Japan's monetary policy update was on the 31st of July. Interest rate hikes. The Bank of Japan increased interest rates from 0.1% to 0.25%. The reduction in bond purchases. The Bank of Japan committed to halving its monthly bond purchases from 6 trillion to 2.9 trillion by 2026. The reason why I'm getting you guys to see this is because everybody thought that the bull market was going to happen this year, when in reality, the global environment, which is out of all of our control, isn't really calling for that. Yes, regulatory implications are coming into fruition. Yes, there's bullish fundamentals happening every single day in blockchain and the crypto space. Developments are unfolding at a rapid pace. And yes, I firmly believe that trillions of dollars are going to flood in. But we have to be realistic on when all of this is going to take place, and there has to be a risk on market environment for that to unfold for investors with much more money than you and I to increase their appetite in risk assets and drive money into this market. And that's not the environment right now in which we operate, which is why your assets are not performing well, which is why crypto is at 1.8 trillion. And until you understand that, you're going to constantly try to fight the markets and hope, like the rest of these retail idiots, that the market's just going to go up. And that's not how crypto works. Okay. So, anyways, let's continue. So, implications of the yen carry trade. The carry trade impact. The yen strengthening significantly affects global liquidity due to the unwinding of carry trades. Investors who borrowed in the low yielding yen to invest in higher yielding currencies are now rushing to unwind these trades. So, for years and years and years, people were borrowing the yen to buy up riskier assets like Japanese stocks, stocks globally, whether that was in the US stock market or cryptocurrencies, which is a global market. And now that that sentiment has shifted and they could possibly get a higher interest rate on their yen, they're rapidly selling, you get what I'm saying? Their stocks and their crypto and buying up yen. It's unwinding the trades, the borrowing that they've been doing against the yen for the past years, like it mentioned in the previous article, since 2007. Okay. Global liquidity source. The yen has been a major source of global liquidity. Major market players have shorted the yen. That means they've been selling the yen or borrowed against it and used the funds to invest long. That means buy risk assets globally. As the yen rallies, massive short positions against it are being closed out. This drives the yen higher, forcing further liquidations of short positions, creating a self reinforcing cycle. By tightening its monetary policy, the Bank of Japan has triggered a cascade of effects, particularly impacting the carry trade, which in turn affects global liquidity and financial markets. So let's break this down so that way you understand this in detail. The Bank of Japan hikes rates. We went over that. We need to go over and understand a hawkish move. So if you don't understand the terminology hawkish and dovish, a hawkish perspective, which I just showed you guys, the Bank of Japan, according to this Bloomberg article and some of the comments from the Bank of Japan representatives have had, means what? A hawkish stance means that the central bank is focusing on tightening monetary policy to control inflation, which often includes raising interest rates and reducing asset purchases. The impact that this has on the yen. As a result, the Bank of Japan's actions, the yen strengthened. So let's understand this more. A strategy where investors borrow money in a currency with low interest rates is called a carry trade, like the yen. And they invest in assets denominated in the currencies with higher interest rates or higher yielding assets like stocks and crypto to earn return on the interest rate differential. The yen has been a major source of global liquidity due to its low borrowing costs, which now are starting to change. Okay. Why this causes a massive sell-off in risk assets. This is the last piece here. So when the Japanese central bank raises interest rates, the differential between the yen and other currencies like the dollar narrows. This makes borrowing the yen less attractive because the cost of borrowing increases. As the yen strengthens, the value of borrowed yen increases. Investors who have borrowed in yen now face higher costs when they convert to other currencies back to yen to repay their loans. Investors then start to unwind their carry trades by selling off risk assets such as cryptocurrencies and stocks to repay their yen denominated loans. This has sparked now a vicious cycle. So, as the yen continues to strengthen, more investors are still unwinding their positions, and it creates a cycle where the yen will continue to rally. This further enforces that more investors are set to liquidate their positions, leading to more selling of risk assets, which we can clearly see as of today is still happening. The yen is strong, and it literally negatively correlates with the total cryptocurrency market to show you I'm not making this up. So let's just look at what I'm talking about. Okay. Here's July 31st when the total cryptocurrency market cap started selling off. You go look at the yen. When did the yen start increasing in strength? July 31st. If we go back here on August 16th, when the yen again started to increase in value, you go look at the total cryptocurrency market cap back in August, here in this area, what started to happen? Investors were buying, liquidating highs from early sellers, and then boom, the yen started to increase in value, and investors started to yet again sell their riskier assets, which now leads us to where we currently are now. The total cryptocurrency market cap with all these bullish moon boys on the internet telling you all that your digital assets, particularly like XRP, are going to skyrocket in value, when in reality, that's not happening this week. It's not happening next week, most likely. And it's most likely not going to happen the week after until this environment, like global recessionary fears and the yen carry trade unwinding, start to cease to exist and the market sentiment surrounding risk assets starts to improve on a global scale. Now, again, when that's going to unfold, we can't put our finger on that. We're not crystal ball predictionists. We're market analysts. And so, as the data comes out week after week after week, we have to be able to determine and base an opinion around that specific data, right? So, we need to remain data dependent, forward looking, hopeful, taking advantage of discounted opportunities, not buying in the rallies, and instead buying in the discounts. So now that prices are discounted yet again, I'll be sending dollar cost average opportunities out to my private community that I'm personally looking at, showing these individuals that are inside our private community that now that everybody else is fearful, now that everybody else thinks that crypto executives like Ripple CEOs and co founders are selling on you, is when you should be buying, not when you should be selling. To full circle my spiel. And this is how you become profitable in the market, by understanding what the market is doing and why it's doing it, not just being delusional and thinking that the markets actually care about stupid fundamentals like this. So, anyways, I hope that that spiel helped clear some air as to why your portfolio most likely right now is in the red. A lot of people will knock this stuff, and a lot of people will say, oh, this stuff is not important. You shouldn't pay attention to this. If you want to listen to those types of idiots on the internet, then be my guest and we will continue to outperform you in our portfolios here at CYPRX. I can guarantee you that. Because when you pay attention to this stuff, you actually start to time markets correctly, which is possible. And you actually start to know when's a good time to dollar cost average in if you're a dollar cost averager, and when's a good time to take profit, right? To grow your bags and really tap into the markets in which you're operating in. So hopefully this helped you guys out. I'm done my spiel. I'll pass the torch back to Mr. Aqua and Mr. Man.